Workhorse stock dropped from a price of over $25 to under $20 overnight. What the hell is going on here? Let's talk about it. Welcome, my name is Greg, and apparently I like to make videos on stocks that are dropping like flies recently. In today's episode, I'm going to be taking a break from talking about Nikola stock going to zero, and instead we're going to be talking about Workhorse and why they dropped by 20% overnight. If you want me to continue to make videos about Workhorse and the most recent updates on this company, make sure to like this video and subscribe if you're new to the channel. To break this video down for you, first I'm going to cover the news that triggered the sell-off for Workhorse stock, and then argue against a bear analyst who says that real investors shouldn't buy Workhorse. And if you stick around all the way to the end of this video, I'm going to give you my theory on why this news actually might be good for Workhorse stock. But getting right into the news with the latest update, last night Seeking Alpha posted this article. Another USPS contract delay sends Workhorse shares sliding. And if we go look at the charts, they dropped from a price of $25.23 at market close yesterday down to a low of $18 at pre-market open. Since this low, Workhorse has recovered to a price of around $20, which is about a 10% gain, so it seems like investors are starting to buy into the dip. Good on them. This news was obviously a major negative catalyst for Workhorse, but later I'm going to give you my thoughts on why I think this is actually good for their stock. The Seeking Alpha article further went on to say that Workhorse fell by 21% post-market after Trucks.com reported further delays in the USPS process to award contracts for the new mail trucks. And this is sort of to be expected. We're talking about the government after all. We still haven't gotten a much-needed stimulus package for over 6 months now. It's just getting sad at this point. Funnily enough, the USPS actually works slower than the Senate does. Who would have thought? This contract has been in the works for almost 2 years now, and it's worth $6 billion as opposed to the stimulus package that's estimated to be around $1.8 trillion. Seeking Alpha also said that according to the report, the Postal Service says it expects to reach a contract with one or more of the teams bidding for the business in this federal government's fiscal quarter 2 of 2021, which works out to be the first quarter of 2021. So this seems to be a delay of around 3 months, since the USPS previously said that this was going to be announced on December 31st. I remember this because I made a video back on October 13th, which was another date that we thought it would go through. A spokeswoman from the USPS in an email to Barron's said that due to the current blank blank, I can't say that word, and its impact on Postal Service and supplier operation, an award is currently planned for the production phase by the end of the calendar year for 2020. Well, thankfully, 2020 is soon coming to an end. It's been a hell of a year, but the USPS representative seemed a little too optimistic. Maybe she was just new and didn't know how slow the government worked. Seeking Alpha also said that the agency previously said it would award the business earlier this year, but then delayed to the end of 2020 because of the blank blank, and it also missed several targets for awarding the contract in 2018 and 2019. According to Seeking Alpha, this USPS contract has been in the works since 2018, but I'm thinking that it might have been a little bit sooner. Now correct me if I'm wrong here, but I think that the NGDV contract was first announced back in either 2016 or 2017. Anyway, they're continuing to delay a much needed refresh for their vehicles. Some of their vans are malfunctioning, others are catching on fire, and overall this is just an old fleet of vans. Not to mention, they're probably not the most fuel-efficient vehicles since they're so outdated. Just something to consider since Workhorse is the only all-electric delivery vehicle maker right now. Another thing that Seeking Alpha included in their article is that the USPS has said the contract would be worth over $6 billion to build as many as 180,000 vans, and it could also split the giant order between multiple parties. Now this is something that me and a lot of other YouTubers have speculated about already. In the email to Barron's that I talked about earlier, there was an elusive S after the mention of an award. If this award is split between multiple companies, I think that Workhorse is going to get a majority of it, because I think that they're the best fit right now. After all, we are talking about the next generation of delivery vehicles. Do diesel vans sound like the next generation to you? Because that's exactly what Oshkosh and Ford are working on. The other company that's still in the running for this contract is Carson, which is a Turkish vehicle manufacturer that's working on hybrid mail trucks. Now there's 2 issues that I personally see with Carson getting a majority of this contract. One, this is a Turkish company not based in the United States. We're talking about the United States Postal Service after all. And 2, plug-in hybrids are a step forward towards a greener future, but they're not fully electric, which means that they're not going to be completely eliminating emissions. To finish off this article, Seeking Alpha gave us an I told you so, saying that Seeking Alpha just posted a bearish analysis of Workhorse from Value Street Research, which says the stock market cap does not justify its excessive valuation. And looking through the report from Value Street Research, they said a key tenet of investing is to base valuation of a company on the present value of future cash flow. Workhorse cannot justify its valuation based on this. So they gave us their idea on how Workhorse should be valued based on their current future sales of 4 different products. The first product line that they talk about is the 6,000 vehicle order for an electric pickup truck, which has been transferred to Lordstown Motors. And the second thing that they bring up is the price of the first 200,000 vehicles sold by Lordstown Motors minus a 4.75 royalty advance. So both of these are talking about Lordstown Motors, which they only have about a 10% stake in. So I don't think that these hold significant value. But the third thing that they bring up does have the most value. A potential $6.8 billion contract with the USPS to provide next generation delivery vehicles in GDV. And then the final thing they talk about is the 1,700 vehicle order backlog for the Workhorse C-Series truck. Notice how they're only giving us the potential of current orders in stock for Workhorse. They're not pricing in future new orders that could be coming up, which Workhorse has been getting a ton of recently. They just sold 500 vehicles to Pritchard Companies last month, which is one of the largest commercial vehicle distributors in the United States. If such a large distributor believes in the future of Workhorse enough to place an order for 500 vehicles, that could possibly signal us as to how the USPS feels about Workhorse. This bear analyst came to a conclusion that if Workhorse wins this contract, it'll only be valued at around $535 million. They estimate a cost of around $35,000 per vehicle, which is based on the valuation of the USPS contract, which was previously $6 billion. But this contract was announced years ago, so we have to count for inflation and also the improvement of battery technology. I'm thinking that the USPS would probably be willing to pay a little bit more for the improved battery technology for electric vehicles, but that's just my own opinion. Value Street Research says that they're going to have a 10% vehicle margin each year throughout the 5 years that they're going to be making vehicles for the USPS if they win this contract. To think that Workhorse would hold a 10% vehicle margin throughout the 5 years that they're filling this contract is just negligent. Workhorse is working alongside with Hitachi in order to improve the amount of vehicles that they're able to make sure the quality is on point, and also make sure that they're making them super efficiently. Most young vehicle manufacturers are able to improve their margins on a quarterly basis, but Value Street Research thinks that they're going to stay at 10%. Right. This bear analyst concludes the article by saying with over 6,000 other potential investments in the United States accessible to investors, Workhorse is best to be avoided until they can show more development of their product lines and savvy investors can reasonably estimate future sales. So they basically just told us that there's over 6,000 other companies that you can put your money in the stock market, and Workhorse just isn't the best choice right now. Well, 6,000 other stocks haven't climbed by nearly 800% in the past 6 months. Now, obviously, you could call this overvalued, but as they said, it's hard to calculate their current valuation. If you're not willing to put your money into a potentially high growth stock, then that's on you. But personally, I think that this huge drop that we saw for Workhorse stock is a great buying opportunity. With the USPS delaying this announcement and dropping Workhorse stock by over 20%, this means that you're getting the stock for a major discount. Now, you could argue that this stock could fall more, and that's definitely a possibility, but I think that this delay gives us more time to buy in. I think that the USPS delaying this by another quarter could actually work in Workhorse's favor. As the bear analyst said, Workhorse isn't yet a proven manufacturer, but the USPS delaying this contract by another 3 months gives them a little more time to ramp up their production. Workhorse working with Hitachi in order to streamline the process and make quality vehicles is a huge plus for them. The Workhorse CEO said that they're expected to produce over 1,800 vehicles next year, and I don't believe that he'd be giving us that guidance if he didn't think that they would be able to ramp up that quickly. Who knows how many vehicles Workhorse might be able to make come 2022, when the USPS contract is supposed to start being filled. They could hire on a ton of new engineers, streamline the process with automation, and also get a different contract with another big delivery company. In my own opinion, the valuation of this company shouldn't be based on current future sales, but rather the growth potential that this company has. Let's also not forget that Workhorse isn't just a vehicle manufacturer, they have their own app for their vehicles and also their own patented delivery drones, which streamline the delivery process. If Workhorse is able to take over a majority of the last mile delivery industry, which is worth around $18 billion, this would make their company worth around $9 billion, which is a threefold increase in their market cap. Obviously, this is all just my own opinion as somebody who holds 140 shares of Workhorse, so take this information with a grain of salt, but I am planning to buy more of Workhorse by selling a put option at around a $15 strike price. If you want to know whenever I make this move, I post every single trade that I make over on my Discord. This is a free trading group with over 800 members. It's been growing like crazy recently, and I post every single trade that I make over here and also the stocks that I'm watching each week. That's all I've got for you on why I think this huge dip on Workhorse stock is a buying opportunity. Thanks for tuning in, and as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.